Hi, friends. It is Ashley and Bill for another mortgage moment. I'm Ashley Tullis. I'm a real estate expert here in Dripping Springs. This is Bill Roegelein. He is my partner in money all over the great state of Texas and a few other as well. And we bring you some mortgage info every single week. So this week, we're going to jam for a little bit on assumable loans. Maybe you've been on Zillow and you've seen in the comments that the seller has this incredible interest rate, and you too can purchase that home at that incredible interest rate. But it is so much more than just that one sentence. So, Bill, give us the skinny on all of the assumable loans. Can I really take over that house at 2.2%? What's the deal here?
Yes, and this has been something that's been along for a while and been around for a while. The reason it's coming up so much more nowadays is obviously because of these really low interest rates over the past few years that people bought houses for. So assumable loan, and you'll see it sometimes when you're maybe searching for a house or something. They say, hey, this house has an FHA assumable loan at a rate of, whatever, 2.75 or something. So there's these low rates to take advantage that, obviously the particular situation could work out for the individual. So this only works on government loans. Okay. I've heard in a rare situation, a conventional loan, potentially you can assume it, but most any servicer will not. It's got to be a government loan, your FHA and VA and so forth. So these loans,
if you have a VA loan, you have to be a VA borrower. And if you have an FHA loan, you have to be an FHA borrower. You can't have a VA loan and then an FHA borrower. It can't cross.
No, actually, and I'll touch on that because
cool.
You can take over a VA loan if you're not a veteran, believe it or not. So, and I'll hit on that briefly because I want to make sure it's made point, because there is a catch to it a bit. Okay, so you're looking at this house and it's worth, I don't know, it's sell price $500,000 and there's a $300,000 FHA loan on it for really low rate. So how this works is the servicer that owns that loan and is servicing it for the individual, it all goes through them. So I'm not really involved. Lenders aren't really involved in this. It's all through the service company. You would discuss with them. You'd have to qualify just like you would to be able to take that payment over, just like you would qualifying for any home purchase. Okay. You can take that loan over, but the rest of the equity. So if you take over a $300,000 loan, there's still $200,000 in equity that the seller is owed. So that does have to come out of the buyer's pocket. Okay. Everyone I've talked to, a lot of second lien companies, you can't borrow that money to cover that equity. So just keep that in mind. It's not for every situation, but if you've got some money in the bank and you've got some money hanging out to use, you just have to pay that difference to the seller out of pocket, whatever the remainder is. And then you take over this loan from the servicer at said rate, FHA or VA. So your question about VAs, yes, myself, I'm not a veteran. I could take over a VA loan if needed, or if it's available for me for a low rate. The catch is the seller, who's a veteran, more than likely, or a spouse of a veteran, or however it works, that used the VA loan to buy it, their entitlement to use the VA benefits, again, will be tied up until that loan is paid off in full.
What is an entitlement? Give me explain like I'm 5.
Yes. Any veteran earns entitlement from their service. Okay. After their discharge, we look at VA entitlement to be sure that we can do a VA loan. And there's a lot of different formulas of how it works, because you can buy 2 houses under a VA loan, just depending on how long you've had it, how much is left on the loan, how much entitlement you have. You might need a down payment. The great thing about VA loan, right, is you don't need a down payment. So it's a great product for our veterans. So this entitlement that they've used to buy this house is tied up in that loan. So once it assumes over to say yourself, for instance, buying this new house, that entitlement is wrapped up in that loan. So the VA might not be able to use their entitlement again for a new purchase until that loan is fully paid for. Eventually, whenever maybe you sell the house down the road, or or if they've earned some additional entitlement because of the longevity loan or how much it's paid down, they might be able to use it again. But more than likely, they would need a down payment out of it. So yes, you can take over a VA loan, but for the veteran that's might be listening to this, is your VA entitlement might be tied up. So keep that in mind when this scenario comes up. But it's great for a specific scenario. So do your homework a little bit on it, and obviously, if you got some money in the bank, it might make sense when looking at a house.
All right. So Cliff Notes, it's not as easy as that one sentence. You just get to snag that interest rate. There's a few more hoops to jump through. You are going to be on the hook for the equity piece, and traditional second mortgages are almost never, ever going to be a fit. So you'll have to be creative with that financing and seek other alternatives. For our VA borrowers, look really closely at that entitlement benefit. Make sure you haven't exhausted that so you can go move on to the next place. Did I get it?
Yes, actually, that's perfect. Hit the nail on the head.
All right, guys, it's Ashley and Bill with another mortgage moment with the skinny on assumable loans. And we will see you next time. You can check out all of our other topics and videos here on YouTube. And if you have any questions, all things real estate, I'm your gal, and all things loans, Bill is your guy. So we'll see y'all next time.
See you next week.